The Russian government concedes the Ukrainian crisis could cost Russia dearly, Marcus.
Yes, indeed. Hi there, Annette. Hi there, everyone. Russian stock markets took a hit on Tuesday on concerns that the ongoing crisis in Ukraine will escalate further and hit the Russian economy. It coincides with a fresh warning of the potential fallout economically. Russia's finance minister has said that the Russian economy is facing its most difficult situation since the financial crisis in 2008. Anton Selyanov said economic growth may grind to a halt completely this year. In part, he blames a massive outflow of capital from Russia. More than $60 billion have left the country in the first quarter. This as investors worry about potential Western sanctions. Now, the warning of stalling growth comes at a time when the Russian economy has already slowed. Growth was above 4% in 2011, but came down to just 1.3% last year. Now, at the same time, Germany's economy minister has said that Russia will face more sanctions unless there is a de-escalation in Ukraine. The United States and the European Union have so far slapped travel bans and asset freezes on Russian and Crimean officials. Speaking in Berlin, Sigmar Gabriel said Western powers would be willing to take additional steps.
If Russia is not ready to make sure the escalation finally ends, it must expect that Europe and Germany will be ready to start the third phase of sanctions.
Meanwhile, Ukraine has seen its currency spike against the US dollar and other currencies. The move comes after Ukraine's central bank hiked its benchmark interest rate. The bank hiked that rate from 6.5% to 9.5%, quoting a tense market situation. The hryvnia has lost around 35% against the dollar since the start of the year, which makes it one of the worst performing currencies, I should say, globally this year. It's not only Russian shares that are feeling the pinch of the Ukraine crisis. The main indices in Europe all closed in negative territory on Tuesday, with the Ukraine crisis weighing heavily on sentiment. The FTSE in London was also hit by a drop in mining shares on fears that demand for mining products in China will come to a halt or at least slow down. In the United States, the markets closed above the flat line after being in the red for parts of the day. If we look at some of the underlying reasons for the gains, upbeat earnings helped the indices stateside. Coca-Cola, for instance, beat expectations when it reported its first quarter results this Tuesday. The world's biggest beverage maker made just over $1.6 billion between January and March. That's 8% less than last year, but sales were higher than expected. Coca-Cola's chief executive says that the company's momentum is improving, as, for instance, the economic picture in Europe brightens. And after the bell, we've also seen Yahoo come out with better than expected results, something that may please investors as markets open up once again on Wednesday. We're going to switch gears now. British company Imperial Tobacco has announced it's closing down 2 cigarette factories, one in France and one in England. The closures will lead to around 900 job cuts. Carl Brown has more details.
French factory workers near Nantes get to grips with the news of their eventual dismissal. CETA, a subsidiary of Imperial Tobacco, confirmed on Tuesday that France's largest remaining cigarette factory is to shut down. It's one of 2 such factories, the other in Nottingham, England, that will close gradually over the next 2 years, leading to the loss of almost 900 jobs.
I've got tears in my eyes. I've been making Gauloises cigarettes for 37 years. I don't see why we're closing. They took over the company CETA to get the name Gauloise, and now they throw us out like old socks.
The company says the 2 factories have been operating at less than half of their capacity. The number of smokers in France and much of Western Europe has been falling, due in part to a sustained anti-smoking campaign and rising cigarette prices. In 2005, more than 54 billion cigarettes were sold in France. In 2012, 51.5 billion were sold. And in 2013, a more sudden fall brought the number to 47.5 billion. In a statement, Imperial Tobacco said industry pressures have forced it to restructure.
The proposed closures reflect declining industry volumes in Europe, impacted by tough economic conditions, increasing regulation and excise, and growth in illicit trade.
Brandishing a banner saying layoffs are adding to Imperial Tobacco profits, workers decried the cuts and the announcement that more workers will be hired in Poland. Now the iconic French brand, the Gauloise, will be almost exclusively produced outside of France.
Okay, that was Cal Brown reporting there. And with that, I'm going to wrap up the business news and I'm going to throw it back to you, Annette.
Thank you, Marcus. And time for a change of pace. And for that, I'm joined by